Hi students, very excited to welcome you once again to JC Best Schools online tutorial platform. I am still your host Mr. Linus. Today let's talk financial system. At the end of this lesson you should be able to define financial system, highlight functions of financial system, and explain briefly the components of financial system. But before we move into that, let's take a good look at the diagram on our screen. And here the diagram shows how financial system works. Now, this concept financial system is made up of two words: finance, which is money, and system. System here is made up of a set of organized things that's somewhat interrelated, and they work together to achieve a common goal. And here, this diagram shows how lenders get their money over to the borrowers, and the go-betweens, which are financial intermediaries, aka financial institutions, and financial markets, make it possible for funds to move from the lenders to the borrowers. Then let's consider the definition of financial system. What is then financial system? A financial system refers to a system which enables the transfer of money between investors and borrowers. A transfer of money between investors and borrowers. Or you could say it is a system that enables the transfer of money from the lenders to the borrowers. Still makes sense. The next definition talks about, it says a financial system is a network of financial institutions. It's a network. I want you to note that word network. Now it connects, that's what it's talking about. It's a network of financial institutions, financial markets, financial instruments, and financial services to facilitate transfer of funds. To facilitate the transfer of funds. Now I want you to know they interconnect each other, and they work to make sure that funds are transferred from the lenders to the borrowers, or from the savers to the spenders. The system consists of savers, intermediaries, which are financial institutions, instruments, and the ultimate user of funds. And note this is very, very key. It's a very important point to note. The level of economic growth largely depends upon and is facilitated by the state of financial system prevailing in the economy. It is encouraged or it is stimulated by the state of financial system prevailing in the economy. Now, what this statement is actually saying is the level of economic growth in an economy or in a country largely depends on what? The functioning or the growth of financial system. So if there should be economic growth, there should be smooth movement of money from the lenders to the borrowers. Now let's look at the functions of financial system. Number one, pooling of funds. In a financial system, the savings of people are transferred from the households to business organizations. With this, production increases and better goods are manufactured, which increases the standard of living of people. Now here is saying pooling of funds. Now households tend mostly to save their money in banks. And banks are example of what? Financial institutions. They are examples of financial institutions. Now in this case, the money saved by lenders or savers are now made available for which people? For the users, spenders, the borrowers to come and take it in form of loan to pay interest upon return. Now in this case, this is the pooling of funds. Because this institution exists, because these financial institutions exist, then money is made available for what? Production purpose. Now funds are pooled from households, income earners, or business owners. When they put their money in the bank, when they deposit their money in the bank, now the money is pooled from the bank and made available for investors for spenders or for merchants to run businesses. And in this case, the standard of living is improved. How? Because goods are made available. Goods are made available for consumption and satisfaction of wants are met. So one of the points says is pulling of funds. And fund is pulled from household to business organizations. And business organizations in turn make a judicious use of the money to better the lives of the people. Now the second point talks about capital formation. Now business require finance. These are made available through banks, households, and different financial institutions. They mobilize savings, which leads to capital formation. Now capital formation is the accumulation of capital, which are used for what? For business purposes or for financing capital projects. So here, one of the functions of financial system is to make available capital, which accumulates for a long period of time to form what could be used for investment. So here it says capital formation, business require finance. It's one of the points, somehow related to the first point that says pooling of funds. So here, because banks, financial institutions are made available, households are required or are meant to save their money in the bank, and business owners go to the bank to get money. Now, by getting money, they now get enough capital. You know what capital means? Money used to do what? To set up a business. So here, one of the functions is to form capital. That's fair enough, to form capital. And how is capital formed? Accumulated savings are now made available to set up a business, which is capital formation. Now here, these are made available through banks, households, and different financial institutions. Now households deposit to the banks, and banks make them available for business owners or merchants. Next one talks about facilitates payment. The financial system offers convenient modes of payment for goods and services. New methods of payment like credit cards, debit cards, checks, etc. facilitate quick and easy transactions. These facilitate quick and easy transactions. Now, businesses go on smoothly because there are easy ways to make payment. Mind you, this is possible because financial institutions exist. So it cannot work if they are not in existence. So one of the functions of financial system is to make sure that payments are rapidly made, or payment of cash is done in a smooth and a fair manner. That's one of the points. Say through credit card you can make payment, through debit card you can also make payment. Checks, you can make payment through checks. So payment of probably something you want to buy, or if bought, you could use check to clear the debt. So that's one of the functions of financial system. Now the next point is provides liquidity. In financial system, liquidity means the ability to convert into cash. The financial market provides the investors the opportunity to liquidate their investments, which are in instruments like shares, debentures, and bonds, etc. Here, one of the functions is to provide liquidity. Now, the examples mentioned, shares, debentures, bonds, can be converted to cash. Now, let me tell you, financial systems use of financial markets make use of these instruments to lend money. For instance, a business owner may want to get loan or get money from a financial market. The person has to sign a debenture check. A debenture instrument is an instrument. Now, the person will issue it to the financial market to be able to get money from the financial market. Now, this is a certificate of indebtedness that he has the right to pay so and so amount of money at so and so time period in future. So this enables the person to get money or get the fund required to run a particular business. So here, such debenture can be converted into cash. Or even if someone that actually wants to lend money can now lend money and get the debenture certificate. Now he's holding the debenture or bond. Government get money through bond. If government, for instance, wants to get cash, maybe to fund a project, they will issue a bond. Now the bond will make them to have the right to get money. Now commercial bank, through government does that through central bank, and central bank now issues to commercial banks. Commercial bank, which is the holder of the bond, now has the right to convert. The commercial bank has the right to convert the bond into cash at the expiration of the contract. So this helps, it provides liquidity, and liquidity talks about ability to convert into cash. So the holder of the fund or the bond or the debenture or share can easily convert it into cash, which could be used for business activity or any project whatsoever. The next point talks about short and long-term needs. Short and long-term needs. The financial market takes into account the various needs of different individuals and organizations. This facilitates optimum use of finances for productive purposes. Now, short and long-term needs could be short and long-term loans. Are you getting it? And when we talk about financial markets, under financial market, we have two types of financial markets. We have a short-term financial market and long-term financial market. Now, short-term is known as money market. Long-term is known as capital market. So, short and long-term needs of money are made available through financial system to the people who need them, either to finance a project or to run a business or for emergency. Next one talks about risk function. Risk function. The financial markets provide protection against life, health, and income risk. Risk management is an essential component of a growing economy. Now, what it simply means is risk function is the financial market makes money available in case of emergency. For instance, you have financial and insurance companies. Insurance companies take care of maybe life, case of sudden death, or death of a loved one, which actually has a certificate of insurance. Then the company will pay the bereaved so and so amount of money. Now we'll have health insurance and income insurance. So in this case, this function helps to redeem such debt or such liability, which in turn will better the lives of people and also grow the economy. Now, health insurance, in this case, someone that actually has health issue may for some reasons has what we call insurance with an insurance company. Such risk can be taken care of because money will be made available for the treatment of the health challenge. So these are functions of financial system. And let's look at the components of financial system. You have number one, financial institutions. Financial institutions. Now look at the diagram, you can see 5 of them. You can see financial institutions, financial instruments, financial services, financial markets, and money. What then is financial institutions? Financial institutions, which are commercial banks, investment banks, brokerage firms, insurance companies, and asset management funds facilitate smooth working of the financial system by making investors and borrowers meet. They mobilize the savings of investors, either directly or indirectly, via financial markets by making use of different financial instruments. I've made mention of financial markets. I've made mention of money markets and capital markets. I also made mention of instruments traded in financial markets. We have a stock, we have shares, we have bonds, we have debentures. So these are instruments. Now, other financial institutions, they make available these instruments or the running of the financial activities. How do I mean the running? The deposit of money and the borrowing of money. Now, in between lenders or investors and borrowers, now the investors invest the money. They put in the money and they are issued a share or stock. The money is already in the stock market. Now, a borrower may go to borrow money and do what? Present a certificate of indebtedness, so that what will happen? So that he will be able to get loan from the bank. So the financial institutions serve as the go-between, the body that helps the investor, which is the lender, to lend his money and the borrower to borrow from the institution. So it serves as, it bridges the gap between both of them. So they help the lender, the investor to invest, the investors to invest their money, and helps which people again, the borrowers or the merchant or business guys, to do what? To get to fund their business. So that's what financial institutions, they are institutions. That is what you have to know. The important point there is they are institutions. So they are institutions that help to make sure that these things happen. Next one is financial market. A financial market, which is also a stock market, bond market, is the place where financial assets are created or transferred. It can be broadly categorized into money markets and capital markets. I said this before. Money markets handle short-term financial assets less than a year, whereas capital markets take care of those financial assets that have maturity period of more than a year. Now here, in a simple sentence, financial markets are made up of money and capital markets. Money is for short-term loans, capital market is for long-term loans. So this financial market is a market that creates short and long-term loans for borrowers. It also helps the lenders to also invest through financial institutions. Then the market helps borrowers to get loans either on a short-term base or on a long-term base. And the next point is financial instruments. This is an important component of financial system. The products which are traded in a financial market are financial assets, securities, and other types of financial instruments. There is a wide range of securities in the markets, since the needs of investors and credit seekers are different. Now let me explain this a little bit. Now here when it talks about a wide range of what? Securities. Now, like I said earlier, in the financial markets, we have one. Money market is for short term, while capital market is for long term. So it's a clear indication that credit seekers, which are borrowers, some may need money for short-term purpose, some may need it for long-term purpose. So that is what the point is actually saying. And some may want to keep their money for a long period of time, but some may want to keep their money for a short period of time, that is, in the place of lenders. So in this case, there are different securities traded here for different purposes, some for short term and some for long term. We have examples like equity shares, we have debentures, we have bonds. Bonds are basically for long term loans, etc. are some examples. These are examples of what? Instruments traded in financial markets. We also have the remaining components, money. Money is considered as anything which is accepted for payment of products and services or for repayment of the loan. Above all, it is a medium of exchange and acts as a reservoir of value. Now, I don't think I need to talk more on this concept, money. Money is a legal tender. So it's one of the components, because when we talk about finance, when we talk about short-term loan or short-term or long-term loan, we're talking about money here. So it's a medium of what? Exchange, and acts as a reservoir of value, a store of value. That's what the point is actually saying. So here, money as a component, which is as a part of financial system, works as a medium of exchange, or is accepted for the payment of goods and services. Now, in this case, a merchant, for instance, or a business owner that wants to run a business needs money to do what? To settle debt or to set up a business. So here, money here is also a component of financial system. So it's part of the components. We have 5 of them. So it serves as a repayment of loan, or as a payment of debt, or as a medium of exchange. The last point, or the last component here, talks about financial services. These include services provided by asset management and liability management companies. They help in obtaining the necessary funds and also ensure that they are deployed efficiently. They help in borrowing, selling and purchasing securities, lending and investing, making payments and settlements, and caring for risk in the financial markets. Now, financial services are the services being conducted by financial institutions. Does that make any sense? There are services being conducted by financial institutions. When I was treating financial institutions, I made mention of several institutions as examples. So here, these are the functions they carry out to make sure there is effective running of financial system. So one of it is to do what? To manage assets and liability, or to provide management in the aspect of assets and liability. Now, liability here talks about loan. So they help to guide and advise on how loan could be paid, or help the business owners to get loan from the institution. They also help to do what? Help them to invest on a good portfolio that will yield what? Maximum profit. So they help in the obtaining of necessary funds and also ensure that they are deployed efficiently. They also help in borrowing, selling and purchasing of securities. They help in lending and investing, making payments and settlements, and caring for risks. Like insurance companies care for risk in financial markets. So these are functions or services being carried out by these financial institutions under financial system. Now, if you ask the components of what financial system, there are 5 in number. Number 1 is the financial institution. Number 2 is financial markets. Number 3 is financial instruments. Number 4, money. And number 5, what? Financial services, which are the services carried out by the first point, financial institutions. And having said all these, let's draw the curtain here. But before you go, consider this assignment. Assignments. I want you to discuss 5 importance of financial system. Discuss 5 importance of financial system to the economic development of Nigeria. Discuss 5 importance of financial system. Thank you very kindly. Make sure you get your work typed, use the Google platform and submit your assignment. Meet you there soon. Bye-bye.